This is how you trade the fair value gap strategy in 2024. Hello guys, my name is Gislen and you're watching the Forex Hybrid. In this video today, I'm going to break down how I trade the fair value gap strategy in a very orderly manner. So I pledge you to watch this video all the way to the end. Kindly smash that subscribe button so you stay up to date with everything I post, because I actually post a lot of valuable content here for free. All right, so stick around and you guys are going to learn a lot from this video, I can assure you. Let's make it quick and short. Right, or is it short and quick? All right, so starting off, what is a fair value gap? All right, a fair value gap, according to Google, a fair value gap is a gap in price movement that occurs when there's an imbalance between buying and selling. It creates an area on the chart where price haven't fully adjusted, right, which can often attract price back before it continues in its original direction. Now let me show you guys what a fair value gap is instead of telling you. Right, it's going to be easy for you guys to pick up. All right, I'm sorry guys, let me expand this thing because sometimes my computer is just messing up. All right, so this is a fair value gap. Watch, you see this? A fair value gap is a 3 candlestick pattern. We have candle A, which is 1, we have 2 and 3. This candle, sorry, the closing of this candle and the opening of candle C, they don't lap each other, they don't touch, right? We have candle A, candle B and candle C, where these candles closing does not overlap the candles opening on this side. The price has to fill it. All right, it's inefficiency. Now let me zoom in more. Let me zoom in some more. I don't know if you guys can see it clearly. Then let me show you guys where there's no imbalance. Let me show you guys where there's full efficiency and the market has been filled properly. You feel me? All right, let's use this one here. You guys can see we have candle A, we have candle B, which is this big one. We have candle C, which is this green candle here, right? See, candle C is weak here. You see that they overlap each other here. There's no gap in this scenario, right? So you can see that everywhere you see these candles overlapping each other, all these candles overlapping each other here, there's no fair value gap. Look at this one. We have 1, we have 2, we have 3. These candles weak has overlapped this one. They have touched each other. There's no gap on candle B, right? So where you're looking for the gap is on candle B, because that's where the gap really forms. Right, on the second candle, the middle candle. Right now, with that out of the way, I think if you want more information on fair value gaps, it's a whole topic on its own. You can check my channel. I have videos that I've made on fair value gaps. It's going to better explain everything to you detailedly, or you can search it on YouTube, and there's a lot of videos that will educate you on that. Now let's go straight to the strategy, because this video is it's not really for beginners though, it's for intermediate traders. Yeah, so I don't know why I keep trying to break down everything. All right, so let's proceed with this strategy. We are going to need to understand the following, right? We have 4 main subjects here that we have to understand. Order flow, we have to identify a clear trend, we have to understand break of structure, and also risk to reward, that's RR, right? Let's start with the first one, order flow. Now, what is order flow? Order flow in Forex refers to the process of buying and selling currencies that results in changes to market prices, sorry. Okay, it is essentially the movement of orders in the market, which can provide traders with insights to supply and demand dynamics. All right, so understanding order flow helps traders identify potential areas of price movements based on the volume of and direction of transactions, right? So if we look at the price, we see how buy orders and sell orders are being filled and everything. It can help us, or give us insights on how we can easily predict or place trades for potential profits in the future, right? So order flow analysis focuses on tracking how orders are placed and filled in the market. All right, whether they are limit orders, market orders, or stop orders, it helps traders anticipate market trends by analyzing the imbalance between buy and sell orders. It can reveal which side buyers and sellers is dominating on, possibly lead to price shifts. This is very important that you guys follow along, understand these things, right? So order flow essentially is just this, whatever you're seeing on the screen here. This is order flow right here. All right, if price has pushed up here, why did price push up here? Why did price head down here? It is all order flow. All right, now let's identify a clear trend. The next step of this strategy is identifying a clear trend. This will all make sense towards the the ending, because that is where I'll put everything together and you guys will understand the sense in it. So you just have to be patient and listen. All right, now we know what order flow is. All right, for those who did not know, Now we have to identify a clear trend. A trending market is simple. A market where we see consistent higher highs or higher lows is an uptrend. A market where we see consistent lower lows and lower highs is a downtrend, right? So in this case here, we clearly see that we're in an uptrend. How do we know that? Because we are breaking highs to the upside. You can see here, that's a break of a higher low. You can see another, sorry, we have a higher low there. We have a higher low here. We have another higher low here. So the lows just keep forming and they keep going in ascending order. They keep going up and up and up, and structure keeps breaking to the upside. Right here, we have a break of structure. Beautiful, right? Let's label that break of structure. So when we look at this, what do you see? I see trading opportunities, lots of it, but you guys don't see them unless I point it out and show you. So this is not your regular like a fair value gap videos where you see a fair value gap and you come back maybe years later to come and trade them and stuff. This fair value gap videos are actually very, very swift and brief there. It's on the same price leg. That means like on this price leg like this, let's say from here to up, right? Like this from down here all the way up here. The trade is going to be only in this, is going to be only on this price leg. Okay, you know, analyze here, then we to catch the trade when the market is coming back this way. No, you analyze the trade and catch it on this particular price leg on the way up. That's why this thing is so efficient, because you don't have to wait for anything to change. So beautiful. Let's do with that and look at the next checklist. I'll put everything together towards the ending for you guys. I'm not a teacher, so it's quite difficult for me to put all these things together. Try to like pass out knowledge here, so you guys should bear with me. Okay, and then we have to understand the break of structure, which I just labeled there. So you can clearly see a break of structure is when a previous high has been purged to the upside. All right, it could be purged to the downside, it could be purged to the upside. So in this case, that's been purged to the upside. So where this is a break of structure to the downside. This is an example right here. All right, this right here is a break of structure. Why? Because the swing low here has been taken out by this push to the downside. So this low now is lower than this previous low, which this low has broken this one. I'll put this line here. You see that, okay, the market has done this, done that, then it has pushed up from a new lower high, then it has formed a lower low. So this here is also a break of structure. Beautiful. Now we understand what break of structure is. Let's move straight to risk to reward will come towards the ending. So now let's do the strategy. Let's do the example real quick. Now looking at this price leg, this price action here, I can clearly see a trading opportunity here. Let me zoom in for you guys real quick. So first off, you have to go on the 2-hour time frame. I'm on gold right here, XAUUSD. That's the symbol for gold, right? That's the ticker for gold. Now let's do a quick example. Beautiful. Now on gold, you guys pay attention. Like I said, on the 2-hour time frame, look for structure, right? Identify clear structure. Where is the market heading? Looking at this market here, we can all agree that this market is heading upwards. Short term, right? I don't know about the bigger time frames and all of that. I know you guys will be like, oh, do top down analysis and stuff. No, I don't do that. All right, I come on the 2-hour time frame and I trade on the 2-hour time frame. If I'm to trade on the 4-hour, I trade on the 4-hour. All right, there's no holy grail time frame or none of that. Go on the time frame that you're comfortable with and you work with it. I'm working with 2 hours because I think it's perfect for me. All right, so now I'm on the 2-hour time frame. What do I look for? I'm looking for break of structure. First off, I've identified my break of structure. You can see that price has pushed this leg all the way through, and we have a new high and a new low. All right, beautiful. Now, what do we want to see? We want to see a fair value gap. Fair value gap first, very, very important. All right, this is a fair value gap here. Let me draw it so you guys can see it. Then you see where we have our trade there. I don't know if you guys can see it, though. Let me zoom in more. Let me zoom in some more so you guys can see very, very clear. I want this thing to be so clear. All right, beautiful. Now this is our trade. This is kind of A, this is kind of B, and this is kind of C. Where's the fair value gap? It's on kind of B. This gap, these two, this week here, they don't overlap each other. There's a space in between. This is our gap. That is where we're placing our entry, right? Beautiful. Now let's highlight that zone so we can make it more clear. So we highlight this gap here and we label it FVG, fair value gap. Beautiful. That's our fair value gap right there. So that fair value gap you're seeing is your entry here. That's where you enter. Right? You place an entry right there. If it's a very tight fair value gap, place your entry just at the opening of the fair value gap. If it's too thick, I would suggest you take the midpoints, right? Then you place your stop loss on the low of the fair value gap candle itself, which is this big candle here, this impulsive candle. Look for the low, which is the lowest point, which is this week. I'll put my stop loss just right there, perfectly. Good. And then now for the target, this is the risk to reward part, right? For the target, I usually look for 1:3 or 1:2 sometimes. Then now we can actually zoom out and look for look to the left if there's any fair value gap we can target or anything like that. But that strategy is too complex to look at it like that. You just you can set your goals. You can look for these highs to be cleared. All right, you can look for these highs here this week to be cleared out, and that's the most easiest way to target. Knowing where to enter and where to get out is very, very important in this game. You feel me? Like if you enter, get it out. If you don't know where to get out, you can still lose what you made. It's very, very simple. All right, so let me take you guys through another example so you guys can see it on another Okay, so without any further ado, let's do this, right? We have an uptrend here, we have a high, we have a lower high, sorry, lower low, we have a higher high right here. Then instead of a higher low, we have a lower low here, which this is referred to as a change of character, right? Sorry about that. Which this is referred to as a change of character. All right, so instead of the market pushing up, it started pushing down. So the point where the market changes its trend is called a change of character, or in short, you can write the chart. Beautiful. So we have this clear break of structure here, which is also a change of character. Like I said, you can now identify where is your favorite gap on this thing. Where do you enter? It's very clear. It's beautiful, and everybody can see it from the previous example. You guys can see here. This is candle A, this is candle B, and this is candle C. Where's the gap? The gap resides in between candle A and candle C. This is it right here. This is our favorite gap. That's our entry, right? Why? Because this was the previous low that put out the new high. Then this high put out a new low that broke the previous low. So as this low has dethroned this low, this is now a new low, and because of that, this is a break of structure or a change of character. Beautiful. So we have our gap right there. Where do we enter? This is a tiny gap. Like I said, when the gaps are tiny, you can enter at the beginning. If they are huge, you can enter in the midpoint and stuff. So I'll suggest you take me for a while, because where your stop loss will be is going to be too high. Why? Because of this candle. Like I said, your stop loss is supposed to be on the candle that formed the fair value gap, which is the one. So because of this candle, you see we have a very, very wide stop loss, and taking our entry all the way at the open here will give us a huge, I don't want a huge position size. I like my position size to be tight because I like to stay in a trade too long. So I'll enter the midpoint just to reduce that a little. And what will I aim for? I can aim for any of these lows, or I can look for a fair value gap to target. So not to do anything too crazy. This is 3R. Okay, 4R, 3.9. I think it's like 4R already. So we can aim for that, or we can just aim for 3R. Yeah, we can just aim for 3R. Don't be greedy. So yeah, that's our second example. Let's look at another example. Let's look at one more example, right? The last one. Okay, guys. So this is the last example for the day. Now, where do we see let's look at this price action here. There's a lot to look at, by the way, but I want you to focus your eyes here. Focus your eyes here. Right now, let me show you guys. Straight up, we have let's look at the trend. Let's look at the market trend. Is it clear? We have a low, we have a high, we have a lower. Sorry, this is a low here. My bad, I made a mistake. We have a lower low. We have a lower low. We have a lower high because lower than this one. We have an internal low right here. Then we have a higher high. A higher low is an uptrend. It's reverse because we're instead of this high surpassing this one, it's kind of low and stuff. So now we have to look for what is next. So what's next is price pushed down low and took out this low and this low as well. This is a clear indication that price is reversing, right? That's a change of character right there, or another water break of structure. So I'd like to take this low here and label that our chunk, change of character, right? Now, where's the other block? Like I said, it's on the same price leg. You don't have to wait for like, oh, it's on the same fucking price leg that broke. Oh, I'm sorry for cursing, guys. It's on the same price leg, right? So you take this right there. Let me take that again. I don't know if you guys saw it. You see the wick? You see this wick? You see this space on this candle? This space, because this wick and this wick did not touch. That is our fair value gap. Highlight like that. Boom. This box is your entry, is your trade. Where do you enter now? You can enter anywhere, right? Like I said, the box is too big. You are following where your stop loss is. If your stop loss is going to be too high, take the midpoint. If your stop loss is tight, you can take the entry beginning like that. Put your stop loss on top of this candle that formed the gap like that. Perfect. Now you aim for anything you're comfortable with. So it just depends on how you feel. All right. So you can take that, and you're gonna have a pretty good trade. I don't know, a decent trade. Yeah. So that's just how this strategy works. You guys can see how the market came back immediately. We tested it and pushed down impulsively. This is how the strategy works, guys. This is a fair value gap strategy. I give you guys this thing for entirely free. Of course, there's more to this. You cannot just take this and start trading and be profitable. You can do work with this though. You can work with this. I think that you can take this on 70%. You can add whatever you have to it. But I would ask you guys to, or advise that you follow up on this strategy more by joining my Telegram. My Telegram channel is completely free. Just join the Telegram. I take screenshots of my setups and post them there before I take the trades, so you guys can follow me. You can take the same trades for free. All right. Even though I don't put all of my setups there, but I do share some from time to time. And I also have a private group, a private mentorship as well. In that private mentorship, I emphasize on the strategies. I have pre-recorded courses on these particular strategies, and I also have follow-ups. We do live one-on-one Zoom meetings together, and I coach you on how to trade these things one-on-one, and I get to see how you're trading and follow up until you're having good results and everything. So I've been teaching a lot of students already, I took a break to work on some things. I'm traveling to the UK for a project, so because of that it took my time a lot. That's why I've not been uploading. So if you guys check my last video, I uploaded it I think like 3 months or 2 months ago. So it's been a while, but I'm back. Let's log in, guys.